Good morning, and I just spilled some tea on myself. Wanted to drink something. This morning here is really a bit cursed. I just had to restart
What
my
a
whole
great
PC
start.
because either the camera or the mic didn't want to work. So it's gotta be good trading the day then, because this is what the market owes now to me.
But did you
Uh,
say that you spilled tea?
I spilled tea. Yeah, I'm
That's the
drinking green
problem. You're
tea.
drinking tea. You're not drinking coffee. That's the problem.
Yeah, but as you can hear, still I have a little bit of a
Oh,
flu, so I thought like today I keep it at one coffee and then be a good boy and drink this
right.
disgusting stuff here. Blah. All right,
Yeah,
good to
tea's
see
good
you
though.
again. Good to see you
Yeah.
again. Good to see everybody out there. I think we are joined already by a couple of people, as I can see also here on the chats, guys. As always, if you have any questions, you want us to analyze something, you want to comment something, just leave a comment here on the chat, and we'll happy address that, of course. There's one thing I especially would like to talk today about. I mean, we're going to talk about crypto. We're going to talk about Bitcoin. I'm sure Jonathan has a couple of charts he wants to show us as well, as always. Two main topics. We want to discuss a little bit if maybe the bull market is already coming to an early end this time, or what metrics we might be able to use to determine when the bull market is coming to an end. And the other thing I would like to talk about today is actually altcoin season. We this is like a bit of a buzzword in my opinion that I've been reading a lot about. I've been getting a lot of questions also here, especially from our Chinese community regarding altcoin season. So I would like to talk a little bit about that, what to look for. Maybe we can talk about a couple of altcoins there. I would like to share my views here on Solana versus Ethereum. I think it's quite interesting to see what is currently there happening. But without further ado, I think let's just jump right in. Do you want to start today? Or? So I can
Yeah,
get the
sure.
rest of my charts
I
set
can
up
take a
again.
look at. Sure, I can take a look at some overview here of Bitcoin. So we're gonna remove some things here. I want to first just look at the price action and something I think people should be aware of. And I'm gonna remove some levels here. Well, actually, let's put that on here. Some things that I think people need to be aware of is first the correlation that we have between Bitcoin and the overall risk on market. So when we talk about a possible top in Bitcoin, I'm quite certain that now with the the current environment that we have within crypto and especially Bitcoin with the ETFs and the insane, the very high volume and interest coming from institutions and large money managers, basically things, money managers like BlackRock, which is the biggest one. With that also comes the correlation to the rest of the overall risk market. And what I'm talking about here is mainly the equities market. And a good index of that is obviously the S&P 500. So if we put the S&P 500 on here, this is the weekly chart of Bitcoin. And the point I'm going to make here is that there will not be a top in the Bitcoin market without a top in the S&P 500. I don't believe that's going to happen. We're not going to see a bear market on Bitcoin and a bull market on the S&P 500. They're gonna form around the same time. We can put on the chart of the S&P 500 here, and what we have is what you can see is a pretty good correlation between these two assets. So the S&P 500 is in red and Bitcoin is in blue. And you can see here that the bottom of the bear market in the end of 2018 and the beginning of 2019 also gave us a low in the S&P 500. And of course, we had the crash, the pandemic crash, which of course we saw a correlation, and that was a correlation between all assets, not only these. but we see a low in the S&P 500 means a low in Bitcoin. Very interesting scenario here is when we had the top here on Bitcoin, we had, so before I continue here, I want to talk about the idea of confirmation that Charles Dow talked about when he created the Dow theory. When he created the Dow theory, he talked about confirmation where two indexes or indices are confirming each other. And in his time, which is 150 years ago or something like that, he talked about the confirmation between, I believe that was the railroad index and perhaps the industry index, and they had to confirm each other. A breakout on one had to be confirmed with a breakout on the other. Today, that is, we have the Dow Jones Industrial Index, and his ideas are still valid today. And today you could look at confirmation between something like perhaps the Russell 3000 or the Russell 2000 and the S&P 500, right? But looking at Bitcoin and the S&P 500, this is very interesting because a top in Bitcoin was a breakout on the S&P 500, but a top in Bitcoin while also creating a top in the S&P 500 was the start of the bear market. We can also see that the bottom of the bear market for Bitcoin was also the bottom of the bear market for the S&P 500. Now, of course, when looking at this, we're looking at the weekly chart, and we could say that the bottom of the S&P 500, the low was on the 10th of October, while the low was 1 month later on Bitcoin. So we have to understand that there's going to be, it's not going to be picture perfect, but looking at the time period of this and looking at a asset like Bitcoin that has a cycle of 3 to 4 years, having a accuracy of 1 month can be very, very profitable. And now we'll look at where we had a high in the S&P 500. We also had a high here on Bitcoin. We had a breakout on Bitcoin, and then about 1 month later, we had a breakout on the S&P 500, confirming each other. Same thing here. A range on Bitcoin, a range on the S&P 500, breakout on Bitcoin, breakout on the S&P 500. So right now, these two assets, one index, the S&P 500, giving us a good view of the U.S. equity market, which kind of gives it a good view of the whole world economy, if I'm going to be honest, if you look at the bigger picture. And now they're confirming each other, okay? So I believe that the next top of Bitcoin will, of course, come in when there's going to be a top in the S&P 500. So analyzing the overall market from a broader perspective and looking at warnings of recession can be a good understanding of when we might have a top in Bitcoin, which interestingly enough, also, we have some indicators that is worth looking at in terms of long-term price stability and price action on Bitcoin, something like the MVRVC score, which of course, as you can see down here, when we add all of this, is now approaching the area where we are between, we're above the 3, we're above 3 on the MVRVC score. And as you know, I got my possible sell zone around between 5 and 6. And I believe that this will correlate to around August, September next year, where we also meet the average days from halving to top, which is right here. Now, again, we're talking about 1 month before or 1 month after. We have to have a broader perspective here. And
don't try to time the top. You gotta phase out of the market slowly.
Exactly. And I think we have to also take into consideration the idea of alpha decay, or the idea that everyone is now looking at the MVRVC score. When I started looking at this was something that I didn't share to people, because I knew that this is extremely powerful. This is a huge edge. And I believe in my trading circle back in 2008 and 2019, 2018, and 19, we had this as a secret edge, within our community. And then, everyone started using it. And like, well, okay, now we can go public with it and start doing these live streams with it. But one thing that a lot of people are mistaken about this is the alpha decay, because the sell zone on the MVRVC score is above this red line right here. That's the original way to use this. But if you put a trend line on like this, you will see that there's the tops are becoming smaller and smaller, and we have a whole different market structure. So looking at this as a possible trend line, we can perhaps expect price to the top on the MVRVC ratio to be lower. Now, another indicator that is very good to use when trying to time the cycle tops in Bitcoin, and I believe that's where you make most of the money, is looking at an indicator like the NUPL, which is the net unrealized profit and loss. And this is very similar to the MVRVC score, but this one talks about euphoria and greed, where if we see here, every time this indicator flashes red, that means we are in euphoria. And every time it flashes green, that means we are at max. What's you have euphoria at the top, and then at the low you have max fear, I guess.
Max fear, depression.
Yeah.
FUD.
Probably depression and capitulation. But this I don't know what these greens are. I haven't really. But you can see that this level is tilting a little bit, while that one up here is a trend line. And again, the same thing goes for the NUPL. You have certain levels of euphoria, but you have a descending trend line right here, and we are so very close to the top right here. Now, the original top is above, around this area, but we are very, very close to that top. So both the MVRVC score is signaling that we're getting closer and closer to the top, and this one is signaling even more that we're getting close to the top. And we have the target of around August and September, maybe even October next year, where we have the average top to halving. And interestingly enough, I've been working on an indicator here which creates the now this is a bit more advanced analysis, and I do recommend that you look into this, because this is really, really powerful stuff if you want to do some studying here over the weekend. Look at the 10-year treasury yields for the US and the 2-year, and then you look at the yield curve spread between these two, and there's an edge in here for sure. I'm working on this indicator. It's not complete at all, but here we're plotting the yield curve spread right here, and when there's an inverse yield spread here, you will see that a lot of times it coincides with a market top. So that is something very interesting to look at. And I'm not going to go into detail on this because I'm still working on the indicator, but looking at that and looking at historical data on the S&P 500, when the recessions have occurred, we could assume that historically, next summer, the summer of 2025, next year, points to the start of a recession in the overall equities market, which also aligns with the top of Bitcoin, which is just overall very interesting. So I do think that we might overshoot it. I mean, it might be the end of next year, okay? It might be the end of next year. But around, in the next 6 months or so, we have to start planning for an exit, right? And we have to start thinking about the fact that the bull market will not last forever, and these conditions that we are in right now with the S&P 500 absolutely going crazy since I would say October in 2022, we have a overall primary uptrend, and that's my overall analysis of the cycles here that I'm looking at.
It's very interesting that you are looking at the yield curve, because I'm looking at that right now as well. I'm planning to release a video on that actually next week. So I've been looking heavily into this, and maybe it's a little bit like to explain to you guys out there, inverted yield curve means that like when you have two treasury notes, for example, one with a 10-year maturity and one with a 2-year maturity, when you suddenly have a higher yield on the shorter term treasury note, so you earn more with a shorter term. Normally it should be the other way around. If you commit yourself for 10 years, you should get a higher interest rate, but sometimes it's inverted. And whenever we see something like this, these points usually actually very often mark also like a phase where we see stock markets topping out, because usually what follows to an inverted yield curve is, like Jonathan just said, a recession. Very complex, the whole thing. That's why I thought like I want to do a video about this to explain this a little bit more. And yeah, I mean, I can only repeat what Jonathan is saying, that because I also think it's like pointing everything into the same direction at the moment. One thing that I've been looking at over and over again, I think I talked about this also here, is this presidential stock market pattern that we see over and over again. So the blue one here was how the S&P 500 performed after Barack Obama was elected. We have here in orange the first term of Donald Trump. We have here Joe Biden, of course. Now I can begin here from the beginning again. I can make another chart here, the second term of Donald Trump. And what we always see, no matter if a Democrat or a Republican was elected, we had 1 to 1.3 years of really good performing markets. Yeah, November this year plus 1 year. Yeah, we are in November 2025 then. So that's another thing that kind of points like that somewhere around this plus minus a couple of months. Of course, not we're not able to pinpoint this directly at the exact date and time, but usually we see markets topping out, and then we see something like 1.6 to 2 years really of very choppy markets where we have a quite severe correction on the stock markets, which then coincides, of course, also with what we can expect from Bitcoin. Because if we look here, you see I have this MVRVZ score here also always. And by the way, this what Jonathan was talking about, this alpha decay, this means that alpha decay basically means that you cannot expect the same return on investment anymore that you had, for example, after the first halving or after the second or after the third halving. Why? Because the market cap of Bitcoin becomes higher and higher. And it's, of course, easier if you have a coin that, let's say, has a market cap of 10 million. It's easier to go from 10 million to 100 million than it is to go from 100 million to a trillion, or right now from 1 trillion to, for example, 10 trillion. That's a whole different story. You need to have much more capital for that. Of course, we have those inflows now, thanks to the institutional investors, thanks to the ETFs. But still, you cannot expect something like a return on investment of, I don't know, 5,000% or you name it, what we had in the past already. This is alpha decay, so you can kind of expect. I agree very much here with Jonathan that this MVRVZ score probably will eventually top out somewhere, I would say around maybe 5, maybe even a little bit under 5 eventually. Now, what is interesting, in my opinion, here, if we look long-term again at Bitcoin, is to kind of have a look at how long did it actually take from the halving until the very top. Halving 2012, it took us around 370 days. After the halving of 2016, around 526 days. After the halving 2020, if we want to count the second top here, I mean, this can be discussed, of course, as well, but I think the price was at the second top a little bit higher. In 2021, it was 546 days. So there seems to be a pattern here that somewhere between 370 and 550 days after the halving, we see a cycle top. So when price should somewhere reach here this upper red channel of a logarithmic regression. And that would be, like Jonathan said, somewhere around end of April 2025. I think that's a bit too early. And latest 6th of October 2025. So this it also fits very well into what you just said, Jonathan, that we're probably going to see a top around some August, maybe July, maybe it's September, maybe it's October, somewhere, let's say in the late second or early fourth quarter, late third or early fourth quarter of 2025. I agree very, very much with you. So everything really points into this direction. We have inverted yield curve. We have the natural cycle of Bitcoin, where Bitcoin tops out like a year to a year and a half after its halving. We have this presidential stock market pattern, where we can see over and over again that markets perform for a year very well after the election, and then things come tumbling down a bit, and we have like 1.5 to 2 years really of not so good performing markets. Now, another thing that's pointing in that direction, in my opinion, is here from Into the Cryptoverse. If we look here at the Bitcoin price color coded by risk level chart, and we can just look at the times where, according to their metrics, Bitcoin was in a very risky environment. So risky environment, by their definition, is anything above 0.6. And you can see that we've entered this here already again. So according to their risk metrics, we are in a more risky environment where it's not so super sure anymore. Are we going to see an upside still? Now, we have to, of course, say here also, when we had those orange dot, usually it still took a while until we reached the very top. But you can see already here that the ice is becoming a little bit thinner already. Now, that doesn't mean that we cannot see something like, I don't know, $200,000 or even 300,000 or even 500,000 US dollars in 2025. Because we all know when markets start running, especially in crypto, they exaggerate very much to the upside as well as to the downside. From the downside, we saw that all the way down to, what was it, 16.5 or 16,000 US dollars. I think it was after the collapse of FTX, where we saw this very, very low. I still remember I was in Sumatra back then and trying to make a video about it. And we had some live streams about this. And so to the downside, of course, the exaggeration, we have the exaggeration, of course, also to the upside. This is also actually why I started selling some of my Bitcoin recently at around 93,000 US dollars, because I don't know. I don't dare, I don't consider myself that arrogant that I can say, yeah, for sure, we are going to see the market top out at this red band here, which is going to be at 200,000 or maybe 300,000. I don't know. So what I'm doing is I'm slowly starting to scale out. I sold some now. Over the course of the next months, when I see we are going higher, I'm going to continue sell something. I'm actually selling stocks right now as well, taking the money off the table there, investing it in more short-term treasury notes, or even having it in cash, on a saving account or whatever, or in the anticipation that somewhere next year we are going to see the markets top out. And we know one thing is, like, when the markets top out, it's going to be very quick and dirty. Usually we are going to see a blow off top, and then we are going to crash massively down. And this is going to be then the time where people come asking, oh, I should have sold, I should have sold, I should have sold. I tried to time the top. Don't do that. If you were in for the ride already, especially on Bitcoin or whatever other coins you're holding from, let's say 16,000 or 20 or even 30 or 40,000, you have a very good return on investment. Let's not forget that. If you bought at, let's say, 20,000 in 2022, you have 5x your money within 2 years. This is like, which makes you, if you can continue to do this, would make you like the greatest fund manager in this whole world. This, but this is also, like, I think, like, when people who start getting into crypto get a little bit a screwed up perspective on what actually is a realistic return on investment. The average investment fund, mutual fund, which is performing very good, like those who have the best track record, they make on average something around 16% per year. So you made 5x, so 2.5x per year in the last 2 years. So maybe if you have held onto your crypto, maybe use the time now to slowly phase yourself out of the market. Of course, like, if we go all the way up to 200 or 300,000, everybody's going to be sad again. Oh, I sold some at 100K. But again, remember, you made 5x on it. There's absolutely no shame of taking maybe even just your initial investment off the table now. Like, the money you invested, but then take this off, because then you have basically risk-free money now working for you, if you get what I mean. Yeah, my 2 cents on that. Do you have anything to add still? Otherwise, I would like to talk a little bit about altcoin season.
No, please go ahead.
Okay. Oh, I'm sorry, my throat is really killing me today.
No worries, no worries.
Let's talk a bit about altcoin season. So one of the most asked questions I've gotten over the last Yeah, weeks really. When is altcoin season starting? When is altcoin season starting? First of all, I think altcoin season has already started. We are well into altcoin season. Why do I make this assumption? If I look here at the altcoin season index by Into the Cryptoverse, we can see we are trading or were recently trading in this red area, which by definition is altcoin season, because in the last 90 days, almost, or let's say, pardon me, 3/4 of the top 50 altcoins by market cap, and this excludes the stable coins, have had a better performance than Bitcoin. So we see Bitcoin here, which in the last 60 days had a return on investment of 90 days, sorry, of 66%. And we have all these coins here to the left, which have a higher return on investment over the last 90 days. The best one was, by the way, what is it called? Hadera, with 470%. Which is a crazy performance. I have no idea what that coin is, but it doesn't really matter. So we are already in altcoin season. The reason why some people do not believe it's already altcoin season is because they like to look at this chart here. This is Ethereum versus Bitcoin. So how many Bitcoin you pay per Ethereum. And we've seen this basically since the bull market started dropping. So we pay less and less and less Bitcoin per Ethereum, 0.038. And this is actually very typical. Sadly, my drawing wasn't saved here when I had to restart my PC, because what you usually see is that around 150 days after an halving, and I'm going to add this chart here on Telegram later, so you guys can, analyze it for yourself as well. Around 150 days after the halving, we normally see Bitcoin, this pair bottoming out, meaning after this, you need to pay more Bitcoin per Ethereum again. However, this time it looks a little bit like this is not a good metric to kind of measure if an altcoin season is underway, because I think the culprit here to look at is Solana. We've seen, like, the one use case for Ethereum in the past was minting new coins, or NFTs, for example, which was like the thing to do during the last cycle. Before that, it was ICOs, initial coin offerings, who were all done on Ethereum, because that was like the only smart contract back then that was really capable of doing something without you being, the god of coding. Nowadays, we now have Solana. So I'm actually have a little bit of a theory that eventually Solana might flip Ethereum. Because, and correct me please if I'm wrong here, Jonathan, because I think like 99% of the new coins we are seeing, meme coins, which is the thing now this cycle, are minted on Solana. You even have, and I had a very interesting discussion with Alex, whom I always do a podcast with in German on Mondays, and he's a software engineer. He said, yeah, Dirk, I just recently interviewed a project. They are doing virtual Ethereum machines on Solana. So if you have an existing Ethereum code for a smart contract, you can just copy paste that into this virtual machine and it runs on Solana. And which is insane. If you don't even need to change any of your code, you just copy paste it. It runs on Solana with the benefit that you have much less fees, because that's the thing, people always criticize, of course, about Ethereum, that for minting, for transaction, you have this exorbitant fees, I think they are called gas, if I'm not mistaken, that you have to pay. You don't have to do that on Solana, and you guys know I'm not a big friend of altcoins, but I tried out Solana because I wanted to send some Tifa US dollar, and I did it on the Solana chain, and it was like super fast, super convenient. Even somebody like me who is not that super tech savvy, I mean, I can code too, but I cannot code smart contracts. It was like very, very easy. So we might actually see, like, the one thing that I've always criticized developing now, that crypto becomes more accessible, like nice user interfaces, that somebody like my mother or my grandpa or whoever can finally use that, and you don't need to be, super tech savvy and connect MetaMask and do this and deploy a smart contract there and so on and so forth. So that might be very interesting, in my opinion, to watch over the course of the next 4 years. And if I would have to bet on an altcoin that's going to outperform every altcoin, my bet actually is a bit on Solana here. I think Alex from the Fivers would be very happy to hear me talking like this.
Yeah, it's very very interesting actually. I haven't really looked into Solana too much because I'm not very into altcoins. I spend most of my time looking at Bitcoin. But yeah, and looking at Solana though, I kind of feel like the we've already had the massive moves, and this is the Solana shot. And when I look at something like this is obviously like I'm the type of trader. The way I'm trading crypto is I want to accumulate down here. That's where I want to buy, and then I'm going to be holding that for quite some time, and that's the same with Bitcoin. So, and I think altcoins and Bitcoin. I mean, altcoins are definitely for trading, and Bitcoin is for investing. But also, when it comes to trading altcoins, it's so very volatile that it's difficult to. It's quite difficult to manage your risk from a trading perspective, because it is very volatile, and if you have a stop loss in the market, chances are that stop loss is going to get hit. The thing with Bitcoin, if you're trading on spot or if you're using low leverage, you don't have you have volatility, of course, but you don't have that same type of volatility. However, if you're accumulating Solana down here, that would be done on spot, and then you wouldn't really care about the spikes and in price action, because you don't have a stop loss. You're just buying spot Solana. If I would be buying spot Solana up here, I think the upside potential at this point is quite limited, because I would probably, my trade for Solana would, from accumulation point of view, would probably be, buying here and then selling here and then selling here, and then I would be out of the market. That would be my trade. So from that perspective, obviously we have what I would view as reaccumulation right here, and we had that breakout, and now we're actually testing the very highs of that accumulation range. So the problem that I'm having with this chart is the gap that we have down to this level. That's the major problem I have from a trading perspective, because down here it's a 30% move to the downside, which from even on Bitcoin that's possible on in a bull market. So in a bull market on altcoins, yes, definitely we can see a massive spike down 30%. So from a trading perspective, when trading altcoins at this area, I feel like there's such a big risk of just buying at a good level and then getting stopped out, and then price continues. So it's very, very difficult, because like if I would be trading Solana at this point, I would be more interested in doing that in the spot market. But you obviously need quite a lot of money. You need quite a lot of capital to make money in the spot market. Now, maybe we can add two times leverage. Maybe 2 times leverage. You need half of that, but then you need to hold it on an actual exchange. You need so.
I think the problem is also, even if you are just using 2x leverage, you end up having to pay financing costs. The exchange is not giving you the money for a year for free. This is why you either pay overnight financing, which usually means you are trading something like CFDs. If you see something like this, don't use that to hold on long. The exchanges are going to kill you with the overnight fees. I've seen something like on Bitcoin, 2% overnight fee, which is crazy, which means if you have like a 5x position, you pay 10% fee every night. Every night, 10% of your money is gone. But even if you have something like futures, you also have those financing costs. And usually the long pays the short at the moment, meaning like I think it's every 4 or every 8 hours, you pay something like 0.005% usually. And that might not sound like a lot, but it accumulates over time. So you end up giving away large portions of your winnings to financing fees. So when you want to do the long-term game, for example, accumulating Solana here, let's say it drops really here into this reload zone down to $180 or whatever, and you want to accumulate some there, don't do it with leverage, really, because you never know how long it's going to stay there. You don't know if it's this cycle going to leave that zone to the upside again. It will probably, but we don't know. We cannot guarantee that. So you end up maybe having to hold on to it for a very long time, and you don't want to be in something that costs you financing fees every day for the next 4 years, basically. But
looking at this, I think from a technical perspective, this area around 180 is
yeah, that's why I said 180. I think it's
yeah, exactly. And you also said the reload zone, which is also correct. It's down in the reload zone here, and based on this latest up move. And if you add from that low as well up to this one, you also see that you have the 0.618 below here, adding if we add a 50, you'll see that you had the 50% here as well. So this general area, I think that's where I might want to load up on Solana. And actually, from a spot perspective, the problem is, though, if we look at this from a weekly perspective and we try to look at this from more of a cycle perspective, let's see, where do I expect Bitcoin to perhaps top out? Well, around here, like, I don't know, like around this point is where I believe that the overall market might actually top out. That might be a bit early, I don't know, but
you said like August.
How much of that time will be an altcoin season? That's the question. So from a cycle perspective, maybe we have down here, range around here for a little bit, and then perhaps shoot up. So what's that in terms of percentage? So that's a 2x, and I think for looking at this from a cycle perspective, it definitely looks doable in about 200 days from current. So somewhere between 100 and 150 days till the top, and it does make sense if you look at, let's say, that retest to that top, we extend that here. So we could say maybe between 60 and 100%, but what's the risk to reward? Like where would I exit this spot position? Probably down around this area. So from a risk to reward perspective, we're looking at 2. And when I'm trading altcoins, I want like 10, I want this. Up here we have 3, up here we have 5 or 6. So is the risk to reward worth it? I don't know. I'm not sure from a spot trading perspective. Now from a more of a trading perspective, if you're trading this more actively, then that can be your stop loss. And then that would mean you have a 6 to 7 hour trade. That might be possible, and that might be what I would be doing. But I don't really like trading altcoins on leverage because you have these volume spikes and these capitulation moves.
That's the thing, no? I mean, even if you, like, for example, swing trade something like Bitcoin, and we have let me open my chart again very quickly here. Not this one, where we had hold on, give me a second. The bull market support bands, here we go. Where we had this crazy spike here. I'm talking about this one, where we went all the way within 1 day to 104, and then we went down to $91,000 all in 1 day with Bitcoin. Insane. This is a volatility of 12% within just a couple of hours on the largest cryptocurrency there is currently in existence. And so for me, if you swing trade a cryptocurrency, like you want to hold on to it, let's say for 2 weeks or 3 weeks or 4 weeks, it's very, very likely that in a scenario like this, you get stopped out. And if you get stopped out in a scenario like this, let's say you had your stop loss at $95,000, you're not getting $95,000 as the order execution. You're going to get something like 92,000 because volume is moving so fast there. And don't forget, a stop loss order always means the price, when the price is at or lower than your stop loss trigger, you get executed as a market order wherever the next price is there. And this can be very fast. And I'm very sure a lot of traders that were long got liquidated there just to see the price then rebounding by 6, 7, 8,000 US dollars to the upside again. So when that's actually the reason why I don't swing trade cryptocurrencies. Also not something like Bitcoin. When we are trading here in my community, we concentrate on the low time frame. So for example, on this, where we trade really on 2-minute time frames. And by the way, I also don't use a stop loss here. The thing, how I manage the risk here is by trading very little positions. Like for example, I'm trading this year on a 100K account with my Chinese community, and my position size is usually something like 10K. So I'm not using even not using 1x, I'm using 1/10 x. So because if you, and I get this asked, and I understand why this question always comes, where do you put the stop loss? Where do you put the stop loss? I'm more concentrating on the upside potential here and managing the risk by choosing a very little position size, because like this, I can also scale into the markets. I don't need to always rely on that I have a risk reward ratio of 2-1, because especially, and I know you made this experience as well, Jonathan, if you trade like the lower time frames, the 1 minute, the 2 minute, 5 minute, 50 minutes, even the hourly chart, most people will tell you, well, only look for the trades where you have a risk reward ratio of 1.5 or 2 or something like this. However, you end up, first of all, not being able to take a lot of trades, which not necessarily is a bad thing, but you also end up a lot of times that your trades don't hit their profit target, because obviously the market needs to move more to hit a risk reward ratio of 2-1 or 1-2 than when you play something like with a half hour or something. And my opinion is, when you're on the lower time frames, it very often makes more sense to look for something like half an hour, and then get into the market, your move comes, and then very quickly get out of the market. Because the longer you're in the market, of course, the higher the chances are that you will have something like this crazy spike that we see over and over again, like the one we saw on Bitcoin, which will just, flush you out of the market for really the worst possible prices there are. One thing in general I want to say about Bitcoin here, I've been talking about this in my market forecast on Sunday very often as well, is that I said a couple of weeks ago, when prices were trading more than 20% above the blue line here, which is the 8 weeks moving average, daily chart, weekly moving average, that it's very likely that we're going to see somewhat of a correction. And the correction always can be either that the price goes down or that the price tends to go a little bit sideways until the moving averages are catching up. Currently, luckily, we are seeing the latter. So we are seeing a volatile sideways move, but it looks a little bit like what we saw here after the all-time high that we made prior to the halving back in March. So I wouldn't be surprised for another couple of weeks, maybe even a month, maybe 2 months, maybe 3 months, to see more of this sideways action around 100,000 US dollar until we see this final blow up of top to the upside. So this, let's say, frenzy phase that we are all still waiting for, where the market needs to enter this black zone of nowhere between the green channel and the upper red channel. And then it's over after that, finally. So yeah, I don't know, what are your views like on trading a lower than 1 hour?
I think that's. It's definitely doable if you have a system that. I've tried that with good success. Right now, I'm more focused on looking at the at the higher time frames, trying to find cycles in the market and trying to find accumulation and distribution on the primary trends, so looking at the daily and the weekly. But that's mostly because I'm not really finding any massive trending markets. We do have trending markets on like USD CHF, for example. We got USD CAD, very good trending moves. But
I think in
for
general,
the
the
most
dollar
part,
is trending quite good still, no?
Yeah, and well, for the most part, I'm looking at Euro USD as I'm looking to accumulate Euro USD here. I'm looking to accumulate some like GBP USD as well. I'm looking to perhaps start building a position on AUD USD at these lows, and as well as the like NCD USD if we have a rejection here or a bottom being formed here. But looking at more lower time frame trading, we can go into like the 15-minute. Actually, I think we have here. Let's look at AUD. Here we have USD JPY. So you see here on the 1 minute, it's trending very, very nicely. Let's go to maybe the 5 minute. If you have a system where you're getting signals and you can enter on with like a half an hour trade, you can look at, for example, a bounce here. Maybe you have a order around that level, and I mean you can exit at, you're just looking for a very, very small move. So exiting at like half an hour or negative risk to reward, I think people are too focused on risk to reward instead of looking at levels. So instead of
but
like,
I mean,
instead of
this
just
is, sorry to interrupt you here, but this is, what you read everywhere. When you start trading and let's say you lose a little bit in the beginning, when you start naturally, hopefully, looking at something like risk. So you Google something like this, you always find something like, oh, you need to have a positive risk reward ratio of 1.5 or 2, which in general I agree for, but it's just not realistic if you want to trade the lower time frames, in my opinion.
Oh, it's, I mean, there's two ways to look at it, Michael is asking, would you mind, how can one join his crypto trading communities? We got a question about I think it's your crypto trading community.
Yeah.
How can you join yours?
So currently, I'm offering this crypto trading community only on my Chinese social media. So I have a Chinese social media presence as well. But I'm sooner or later going to roll it also out for other countries. And best is just, have a look at my YouTube channel, subscribe it, and then you'll automatically be notified once that becomes available for other countries as well. But thanks for your interest.
Yeah, so on terms of risk reward, I think what you want to do is you want to trade from one level to the next level. And the idea that like I said, there's two ways to look at it. Either, I know Victor from my co-host at the Fivers, live streams, he trades with the idea that he's looking for very high risk to reward trades, and it actually works. I've seen some of his trades running to TP. Like he's looking for like 20 or 30 risk to reward trades, and when he wins so massively big that it pays for all previous losers. So he can have a very long losing streak, but he's only risking, say on a 100K USD account, he might only be risking, like a fraction of that, like below 0.1% on a trade, like very, very low amount. And then he builds that position, and when it hits TP, he wins like 20 or 30 R. But then you have to hold that position. It's a whole nother game. Like it's a way different way of trading, because he might look at one high time frame level and then one high time frame level above, and he want to get a like low time frame entry on there. But he gets stopped out quite a lot. So what you can do is either look for trades where you have very high risk to reward, but you're going to have like a somewhere between 10 and 20% win rate. Like you're going to lose 80 to 90% of the time, which is obviously not very good. I'm gonna link your YouTube.
It's a question. We do a paired stream here, so the stream is on my channel and on Jonathan's channels. That's why, yeah. Thanks for the link. Yeah. I want to quickly add to this. I think like this type of trading, and I always admire Victor actually for being able to do that, because I know I wouldn't be able to do that. You need a special kind of psychology to execute this as well, in my opinion, because you end up very often only having a, let's call it success rate, where you end up in profit with your trades of maybe 15 or 20%. And you need to be able on a mental level to cope with that you have like 10, 20, 25 trades in a row where you don't earn money. Because usually what you see, not only beginner traders, this actually also happens to experienced traders, that after a couple of losses, you start doubting yourself. You start like, that you want to tweak your trading system, that you search for, if I just had this indicator like this in the past, things would have worked out. So I'm only going to trade like this. And now, so you need to be really very, very up to the task when it comes to the mind games of trading, to be able to trade like this. I personally am not. I'm more the person who likes to take profits very quickly, because I thrive when I have a win rate of well above 50%. Occasionally, I will have a loser, which probably I need 2 or 3 or 4 trades. I'm speaking about the very low time frames now to catch up again. But this suits more my trading mentality, at least on the lower time frames. It's a different thing if we talk about spot. I mean, I've been holding on for stocks and Bitcoin now for 2+ years already. So that's a different story. But I think the moral really here is that you need to sit down and analyze for yourself, what type of trader am I? Like, I don't care, if I have losses, they don't affect me at all. Well, then you can do something like Victor does and look for those very high risk reward ratios. If you are not like this, you are more on the frickly side, maybe like I am, well, then you maybe need to look for a trading strategy where you have a win rate of well above 50%, but a lower R in return, so by the end of the day, whichever way you take, the end goal, of course, is to earn money, to get paid off well, for the risk you are taking. If I say paid off well, I mean, of course, that you need a return on investment that is significantly higher than the risk-free. So if your bank pays you, I don't know, here in Germany, it's like 2%, some 2.5% on your saving account. You want to earn more than that, of course. Otherwise, it's not worth risking your money. Right?
No, definitely. All right.
All right. We've been streaming already an hour, I see.
Yeah, 1 hour. 1 hour.
1 hour.
And how's your throat?
It's okay. I'm having a bit like a brain fog. I have like difficulties like finding words today somehow. I think after this I should turn off my desktop and go home again and go to bed maybe and sleep over the weekend.
Nice.
Not good
Sounds good.
be trading, when you're not at your highest mental capacity, of course.
You could be trading from your phone. That's the thing.
No. I'm not doing that. I'm not doing that. I have my trading setup here with my 2 large monitors, and I only trade in the setups. I'm not the one, to trade from my mobile phone. I hate all those apps those brokers have out there that make you.
Yeah, me too.
Click and everything.
It is nice though. It's nice to, like, if you get an alert and you're out and you're like, oh, I need to close this and that, and of course it's good to have. I remember there's a story in Market Wizards where there's a guy, he travels to Africa, no connection to anything, and the market like gaps down, the biggest gap down ever, and his assistant is trying to get a hold of him, and then he comes back one week later, and he's like completely liquidated of his whole wealth almost.
That would be a great title for a movie, like Margin Call 10,000 feet in the air.
Yeah.
Well, nowadays you have internet on many flights, no?
That's right.
But probably also not the wisest thing to do. I don't think the connection is very stable.
Nope.
All right, good. Thanks, guys, for joining us today here. I see we have a lot of viewers actually today. We do. Nice to see you're enjoying what we are doing. We're going to be back next Friday. Are you going to join again there?
Definitely.
Next Friday, we'll see.
Wait, next Friday. What day is it? It's the 20th. Yeah,
20th.
sure. Let's do it.
Which will be probably our last stream for this year,
Yeah.
then, because I'm going a bit on a holiday after that, and you
Nice.
probably too. And maybe next week we should do something like a forecast then, what we think will happen in 2025. I know we did this last year also.
Yeah, I think that. Yeah, let's do that. I wonder what did we talk about? I want to go back and see what we talked about
I actually do
last year.
We can do that, when we talk about like, hey, this is what we predicted last year. Did it become true? What became true? Where did we go wrong, and so on? And then we're going to do the same for next year. That sounds like a good plan. All right, take care, everybody. Always remember to not use so high leverage, and also remember to take some days off if you are also celebrating Christmas. That is.
That's right.
Bye-bye.